एक बार आके देख लो कहीं मैंने कोई गड़बड़ तो नहीं कर दी।
सिर्फ मेरा नाम क्यों?
अरे जिसने घर खरीदा है उसी का नाम होना चाहिए ना।
और फ्रेंड्स क्या कहेंगे?
कहेंगे कि काश अपनी बीवी भी ऐसी होती।
पिछले 100 सालों से ऐसी हर अच्छी शुरुआत का साथ दे रहे हैं हम, यूनियन बैंक ऑफ इंडिया।
एक बार आके देख लो कहीं मैंने कोई गड़बड़ तो नहीं कर दी।
सिर्फ मेरा नाम क्यों?
अरे जिसने घर खरीदा है उसी का नाम होना चाहिए ना।
और फ्रेंड्स क्या कहेंगे?
कहेंगे कि काश अपनी बीवी भी ऐसी होती।
पिछले 100 सालों से ऐसी हर अच्छी शुरुआत का साथ दे रहे हैं हम, यूनियन बैंक ऑफ इंडिया।
We are, good afternoon everyone and welcome back. We are having the concluding session, Indian insurance industry, lesson taught during lockdown and new normal days. We have very eminent speakers, Mr. Mahesh Balasubramanian, MD and CEO, Kotak General Insurance, Mr. Suresh Badami, Executive Director, HDFC Life Insurance Company Limited. We have Mr. Sanjay Datta, Chief Underwriting, Reinsurance and Claims, ICICI Lombard General Insurance Company Limited. We have Mr. Gaurav Chaudhary, Senior VP and Chief Strategy Officer, Tata AIA Life Insurance Company Limited. With this, I'll hand it over to Ms. Malani to take this session forward. Thank you, Ms. Malani.
Thank you very much. And thank you to all our panelists for joining us today. COVID-19 outbreak has actually caused a significant disruption to a gamut of industries, and the insurance sector is no exception. The crisis has challenged several core ways of working for the Indian insurance industry, which is highly reliant on face-to-face interactions, dependence on physical infrastructure for many key operations, for agent trainings and customer servicing. These are just to name a few. Nonetheless, it has not stopped the industry from adapting to a situation on a war footing and launching several measures to ensure business continuity. The question, however, is, beyond the here and now, what has the pandemic taught us? And will the industry innovate its operating model towards a new normal, a more digital future? And that is what we will delve in today's discussion. Now, when we speak to insurers globally, while there are multiple viewpoints on the shape of the recovery and the imperatives for insurers, what can be stated unequivocally is that it is going to be led by digital. The insurer of the future will be bionic, that is combining the power of digital capabilities with the strength of human relationships. As per a BCG study that we did recently with 200 insurers globally, companies which have invested ahead of the curve in creating a future-ready digital capability actually delivers much better metrics on all key dimensions. 2x higher customer satisfaction, 3 to 4% higher growth, and 2 to 4% lower cost ratios. So digital champions are clearly outperforming digital laggards, and this will be even more critical in a post-COVID world. So what we will do over the next hour is spend some time reflecting on the learnings from the past in the light of what has happened. And we will specifically delve into specific topics such as distribution, operations, product innovation, new ways of working. Across each of these specific elements, the underlying theme will be digital and data. And towards the end, we will request our panelists to take a broader view and a broader perspective on the industry. So with that, let me just delve into the discussion and get it started. Suresh, if I could come to you first. And, distribution is literally the bread and butter for the industry. It has always been largely physical. You yourself run a very, very successful distribution, a large agency and bank assurance channels, along with direct and a large digital channel as well. So, Suresh, how have insurers really pivoted these large distribution networks of agency and banker to adopt in this new environment? And what of this is really here to stay? What will we see revert back to old ways versus, what do you see going forward? And to add to that, if you could also put a bit of color around what are channel partners really asking you to provide and to do differently?
So, Parvi, Thanks for this session. But I'll tell you, the journey in insurance in terms of how we should be looking at the customer experience, how we should be looking at higher penetration on term and savings. A lot of that has evolved over the past year. So ever since, LIC, for instance, has been there for a long time, and the private players came, and it's been a fairly long journey, almost 20 years for a lot of the private life insurers. So a lot of the channels, the way it has been built, has been around the traditional channels of bancassurance, agency, direct broking. And, we've been fairly large players. But I think, it's not that something has changed in the last 6-7 months, which has changed the course of strategy for most of the large insurers, not just us. The fact that, look, there has been a shift towards the entire digitalization of the entire journey, right from, because there have been many imperatives on the business front. One is to kind of look at customer servicing differently. The other is to look at the customer experience at the time of purchase separately. You have to look at cost efficiencies. You have to look at as an innovator where you are differentiated in the market. So many of us have been investing in technology and the digital over not just now. I mean, a fair amount of investments have been happening for the last 7-8 years, if not earlier. And there has been a push to say that, look, how do we become paperless? How do we move all our entire journey on a digital platform? So it has been evolving. On the side, what has also been happening is the products by itself have become more transparent. And given what the regulator has been doing in terms of simplifying the products, pushing for products to be transparent, overall the customers are becoming more aware. The customer awareness, and their search on digital, because of what's been happening in terms of the other industries on e-commerce coming in, more and more customers. So a combination of insurers moving the digital way, coming in, more and more customers, a little bit of an echo, yeah. So customers becoming more and more aware, and the fact that products are becoming transparent, I think has been some part of the insurance journey for a long time, right? And so what's happened during the last 9-10 months during this, it just led to an accelerated implementation of what was probably anyway happening. Right. So when we looked at the entire journey of what's happening in bancassurance and agency, if I were to look back, yes, there were a few initiatives which we ramped up. There were a lot of digital tools which were available, which we relied on. Probably the migration to that had been a little slower earlier, but in any case, our journey had been to look at, how could it be an Insta journey? How could it be pre-approved? So we had been working with partners on integration. We had been working in the front end with our team in terms of tabs and mobile apps, which could do an end-to-end journey. So everything from renewal payment to claims payment to the purchase had anyway moved more or less online. It's not just it happened now. So I would think that a lot of work that has happened over the last 6-7 years actually, really came to light when we realized that, look, business would continue. Yes, some of the traditional distribution channels like agency and bancassurance are face-to-face. There is no denying. In fact, our first mandate to our financial consultant partners was to say, look, stay at home. You can do this entire thing end-to-end. Because for us, employee safety and financial consultant safety was paramount. We said, look, let's get out of this whole pandemic without really having an effect on our people, which is more important for us. But as and how we got into the first month and second month, right from work from home, right from technology tools like video, sales, and we implemented something called WISE. We realized that end-to-end journeys and actually the whole process could be done online. And even a lot of our partners who earlier were not adopting shifted to this. So I would say that from a partner point of view, there are primarily the banker partners who are the corporate agents for us, and then there are the financial consultants, and then of course the broking. I think their view has been to say that, look, our ability to get trained, our ability to get products which can be delivered over a digital, our ability to service our customers should not get hampered at any stage. And that capability has come to light in the last 6-7 months. So I would think two things. One, that it helps to have a very diversified distribution. Because, bancassurance was running on a certain model. When agency, we were telling the agents not to go out. And a lot of our financial consultant partners are retired people. They're people who are looking at this as a second option in terms of career. We actually told them that, look, you don't need to. But however, the banks are functioning because they were essential services. The insurance branches were functioning because they were essential services. So what happened was when we could slow down on one side, the other side picked up. And so that was something which I think came to light for us, and we realized. On the online space, it's always been a fairly strong area of focus for us. And similarly, I would think. But there again, a lot of journey was assisted online sales, right? And now it has become a little bit of unassisted sales. So the customers is also able to go back and do an end-to-end journey and buy the product. And we are seeing more and more of customers researching. There's a lot of customer confidence in terms of being able to buy online. But if I were to summarize, I think it's just accelerated the shift which has been happening over the last 6-7 years. And we are happy to note that the BCPs fell in place, the employee engagements fell in place, a lot of it fell into place. And luckily the phygital move towards the traditional channels has really come into place.
Those are very interesting thoughts, Suresh. Absolutely, completely resonate with many of them. Mahesh, coming to you, even from a PNC perspective, do you see similar trends? Has your experience been similar as well from a distribution perspective? And especially the point that Suresh touched around, digital being the important focus area. Has that also been accelerated from a direct to consumer acquisition channel?
Yeah, I think let me cover all three, PNC and health, because health is critical for us at Kotak General Insurance. Almost 40% of our business comes from health. I think what has happened in the COVID era is primarily inertia has been broken. Right? I think the biggest thing is mindsets have changed, and inertia, which was there, a certain kind of reluctance to migrate to channels which are far more efficient because one is always used to doing things in a particular paradigm. I think that's what probably changed. As Suresh mentioned, and I think they've said this in very many forums, the insurance industry had many of these tools already in place. It is not that we had to scramble around and put these tools together, right? Yeah, in some areas, probably we need to accelerate certain, changes, etc. But I think while technically work from home was not something we had envisaged, I think from a distribution perspective, front-end perspective, the tools were already available. We were running parallel worlds, about 10%, 15%, depending on the product and depending on the channel. The payments were coming either physical or digital, and whether people were doing end-to-end policy issuance through digital means was all left to how much the channel could migrate. And we left the tools and waiting for them to pick it up. While there was a lot of pushing and goading, sometimes it doesn't work because you leave it to the end person to decide. But what happened in the pandemic is that the TINA factor kicked in. There was no other alternative. And if you had to do business, this was the only way to do it, right? And I think luckily all of us had the requisite assets in place. So for instance, we moved from 44% digital payments in some channels to as much as 97%. We moved from 45-50% digitally issued policies for some channels to as much as 99%. So I would safely say, except for fire policies and commercial insurance policies, which Sanjay can probably corroborate for Lombard because they're also massive in this space, where we were still doing a lot of stuff, a little bit physical. I think overnight, our policy issuance on health, home insurance, motor insurance was anyway fairly digitized, etc., just skyrocketed in terms of usage, right? So I think, but only thing is, unlike life, I would say that we are also a hugely claim settling industry, right? The frequency of claims and the severity of claims, the number of claims we grapple with is probably lower than what life company manages in terms of the mortality rates, So I think for us, the focus had to be across the value chain. It was just not about issuing a policy and saying, look here, we were able to get the business going. It was able to service every aspect of the value chain, from endorsements to call center to claims registration to eventual claim settlement. I think there again, we were able to quickly deploy all the resources. Our industry is known to be slightly, I wouldn't say ahead of the curve, but the assets were there. Video streaming and doing claims on a tab. I think many companies had already incorporated some of these things in their workflow, right? And thankfully, even our own TPA partners or hospital network, etc., we were anyway settling cash claims or reimbursement claims or cashless claims in 1 hour anyway, even before the pandemic. So I think the things were available. The only thing is the adoption increased a lot, and TINA factor came in, and the whole thing fell in place. Some areas were a concern. For instance, motor claims, we couldn't do the surveys because only in the lockdown the claims completely stopped. Before that, there were claims which had to be surveyed. And after that, the motor claims started coming in, right? But we couldn't go out and do the surveys because obviously you couldn't travel and the dealerships were shut as well. So some disruptions were there. So certain amount of backlog in terms of claims got created. But most of it was very, very attributable reasons. And the moment things started easing out, I think the industry is back. In fact, I just came back from an IRDA meeting. I think record settlement rates have happened this year. Most of the products, the settlement rates have been better. Complaints have been lower than the previous year, right? So if you look at it on most parameters, I think the industry has done pretty well. And there are a lot of learnings to carry forward to BAU or business as usual, right? And I'm sure each of us will start implementing many of these things as the new normal. Maybe we'll discuss about it later in your session. No?
Absolutely. No, this is great to hear that the traditional way had already repivoted and was accelerated due to this pandemic. Gaurav, if I come to you, while the traditional channels have repivoted, are you also seeing some new innovation that will happen in terms of distribution? That will be different from what we've seen in the past. Are you seeing more innovative go-to-market models now?
Sure. So I think, just kind of picking up from where Suresh and Mahesh left it. See, the transition of the sector as a whole was well underway, right? I mean, we were all on that path of digitizing our channels, and just from when you're operating in a competitive market where price is given to you, the way you differentiate is through your servicing capability and through the ease of issuance, and how efficient your sales force is. And the only way they can be efficient is by leveraging the technology which is at hand. So while, it would be amiss to say that, there's going to be a seismic shift from where the industry was operating in January, February last year versus today. But it's all about making those incremental gains stick, right? I mean, for instance, for us, right, we had all the tools, but maybe the adoption was not, maybe in agency, we were at 30-40% adoption. And the first phase of the pandemic was all about training the agents of using these tools which are available, because and it was imperative for them as well if they had to continue their income streams that they kind of move towards adopting this. So that was the first phase of training. And then we moved to the second phase where, once the ability to issue a policy has kind of settled down, then how do you allow or train them to prospect digitally? Because that remained a bottleneck for a very long time. Customers were just not willing to meet, and the sales force was not geared to make those convincing pitches in over the phone or through a combination of a phone or a video call. So a lot of and getting the leads at the first time, leveraging social media within their own circles, what's the kind of hooks and local campaigns they can do to get those leads. So that's the other bit which has accelerated. But I wouldn't say that the industry itself has gone through a seismic shift. It's about making these incremental gains, accelerating them and making them stick. Hopefully, when we go back to the normal, fit is lost, and we continue to, leverage a lot of these efficiencies. For instance, I know that Tata AIA and some of the other insurers, we have started giving up some space because we know that some of these operations, etc., can efficiently be done from wherever people are. So we are kind of realigning some of those operational aspects so as to reduce some of the cost base that we have. I think largely about kind of making the changes stick and not letting the gains kind of wither away.
Yeah, absolutely. We all hope that, many of these learnings continue into the future. Now, let me shift gears and, get Sanjay in. And Sanjay, we've been talking about distribution and it adapting. Also, Mahesh spoke about, claims and some of the operations processes also having the right infrastructure already in place, and they adapted, to operate, and the adoption really stuck. From a risk and underwriting perspective, how did the industry react? And because a lot of the risk writing for life and health policies is still done physically. So how has the industry adapted, and what of that is going to continue in the future? What new innovations will we see in that space?
Hi, happy to be on this panel. But I think a more important question is how does it sustain? To me, I think that's a critical question. There have been a lot of learnings. I think sustenance is the whole important issue. The one important fact, I think the other speakers have talked about how companies have adapted and how our processes have adapted. Somewhere we were already, in the make, and we were able to do it. But the key concerns which come up, and there were some fundamental shifts in the way the regulators started thinking. That's very important. The customer started thinking. We can do a lot of changes inside our company, inside our process, but for the processes to really catch, if you think, A, the regulator, and B, the customers and the ecosystem started adopting it, and kind of get used to it. And from that perspective, if I were to divide it into two parts, the one part is around our own risk thinking, which is inside the customer, inside the company, and how do we assess risk? Has undergone some fundamental, change. Just look at this whole issue of being prepared for the pandemic from a risk perspective. None of us were prepared. To that extent, nobody factored it in either in terms of, I don't know how many of my co-panelists on the life side, but at least on the general side, none of us factored it in terms of taking reinsurance protection for it, because we didn't. We normally look at a cat, we look at in terms of earthquake, flood, and all of that. We do a lot of modeling around that, but no amount of modeling, nothing was available, and nobody thought about pandemic. So we didn't realize, what would be the impact of a pandemic if it come true in terms of the accumulation of, numbers in one point. The point is, we deal with infections. We are an infectious disease country. People die, people, undergo treatment, but it happens, over a period of time, which we are able to calculate and predict to a large extent. But here, these were totally caught unaware. So, for example, none of us had any insurance protection for pandemic risk, for example. That was big shock. So it just gave us a big kind of input that you need to take in risks of these varieties as insurers. Forget what the client buys. Of course, there is a huge amount of awareness around pandemic. I'll come to that later in terms of the outside. I'm just talking internally. The second part, and which is very, very important for all of us, is to be able to how, when you look at a product, let's say take a very simple product around some of the innovated, the regulator asked us to give a COVID only product, correct? Now, to price that, to be able to do that, in the midst of a pandemic, is like giving, fire insurance cover to other tenants of the building when one of the flats is on fire with a big chance that it will spread through all the other things. We never do that. When a flood happens, we just withdraw. We said that when a flood happens, stop giving home insurance in that area or a cyclone. Nobody ever does it. You don't give it at this point. If we went out and did that, without no insurance cover, we still went out and did that as an industry. The regulator caught out to it and came out with a standard product, and they took a fundamental shift there also. They said that normally what happens, you give a very short-term product for something like Mahesh was talking about a visit abroad. So we give a very short-term health kind of risk product for his visit abroad, and he comes back. That's it. The product ends there, or a personal accident policy at the most. But this was a fundamental health cover. Health is normally at the minimum 1 year covered, So they, kind of configured and said, no, for this COVID, because a lot of people are uncovered for COVID, they have, again, they understood that some of the insurances were, given the high size of COVID claims, were totally left unexposed. Private sector was coming into the entire, because the government couldn't handle it on their own. They allowed private sector to deal with it after the initial period. So that's when, they said, come out with a COVID, only product, which help people. And they tried to do it in two parts. One is, just give a payout when COVID happens. On what basis do we give the payout? And, there were risk elements in, do I give it for an antigen test or an RT-PCR test? And, those were kind of big leaps of faith, which we took on the risk side, to be able to, a 3.5 month cover, never given by allowed by the regulator at all on a health insurance at the minimum amount. Correct. And now that will become a new norm for giving disease-specific cover, which is, very, very episodic. For a pandemic, before a pandemic, we never thought of that as an industry. Now, the parts which leaves us wanting, and we were saved as a risk. First is, as a country, there's, look at the livelihood. General insurers look at livelihood and lives both. As Mahesh said, correct. The livelihood portion comes in two parts. Corporates in terms of what damage they undergo and what interruption periods they go through. Now, this was big interruption for all of the lockdown, so they suffered a lot. Not only in terms of customers vanishing, but also in terms of not being able to produce just because the factory was shut down. So now that typically, is a scenario where your business interruption happens without any damage to the thing. So this is, and you realize, the country was not covered for this at all. We didn't pay out just because, thankfully, we were only paying out on the life side, not on the livelihood side, because of this. Second, the country doesn't have a big enough market for loss of job cover. Correct. And at the last but not the least, for a pandemic as a whole, for businesses to get any kind of recovery, any kind of thing, there was nothing known as a pandemic cover per se. So all these three elements came into the picture. The government during this time, said, are you in a position to look at a loss of job cover? It came through the government, through the regulator, to all of us. We were grappling with it. Second, thing which came was a pandemic cover. So there was this thought of having a pandemic pool. Again, we are still grappling with this particular issue. And last but not the least, there's this whole issue around government and economic activity. They're trying to revive economic activity. So you have a lot of spending now being jump started on the infrastructure elements. Now that requires a lot of contractors to come into the picture and job generation thereafter. And for that, if they want to bid for NHI contracts, they need performance bonds. Performance bonds, are not, bankers are kind of very reluctant to give, to unknown contractors and all. They came to, the general insurance industry. Can you give surety bonds? Correct. And again, lot of we as a country don't do that. So these were key risk elements which arose out of the thing. Some, lack of coverages which arose, out of the. But finally, the big learning, if I were to overarching learning, is the risk learning. If you look at it from our side, I just started with the fact that you understood you have to model in everything in terms of things, even though you think the risk could be very low. And on the customer side, a big amount of awareness. Not only customers on retail health and various other people, the risk awareness. So because earlier we were, I think all life, we've been trying to sell it through various other means, but we position risk underneath something else, actually, whether it's savings or some other element. Now risk is coming to the forefront. People will need to buy things for the risk aspect, and they need to be, covered for the right elements, right amount, and that's the big amount. So even in corporates and others, people are reviewing their covers and looking at the extent of coverage, whether it's a BI coverage or the amount of coverage.
Yes,
I'd like to comment here, Pallavi. Just wanted to add some points to what Sanjay said.
Yeah, please go ahead.
Honestly speaking, our entire business is all about risk management, right? Everything else we do is incidental to the fact that we are here to manage risk, I think honestly, we were also probably in a way blessed that this pandemic came and went in a manner where there were some compensating effects, both some positive effects, while there were negative effects. But I think if the pandemic had persisted the way it had persisted probably in Spain or in UK or in US, etc., I think we could have been in far more trouble. Because thankfully for us, I think the severity of COVID claims started going down because the prices being charged, I think a lot of spotlight on that. And that started going down from 1.5, 2 lakhs, 3 lakhs in the beginning to lesser amounts, number one. Number two, I think the case rate itself in India dropped and the mortality was further down as well. So I think if some of these parameters had gone awry, I think we'd have probably been in a far more difficult shape as an industry on the losses side. Today, we're all talking about growth and whether it is 2.5 is adequate or we could have run more. But I think people forget the fact that today we are still operating, and thankfully the industry will still survive this pandemic with anywhere between 65% to 75% loss ratio, depending on the company that you take on the market. I think in a way we probably learned a lot of lessons, but didn't have to pay a huge price for it. But if we don't prepare ourselves for the future, something else happens like this again. Honestly speaking, I really don't know as an industry whether we have covered all the bases to make sure that we are ready for another pandemic of this nature, perhaps worse than this or a different nature. I think we'll have to ask ourselves a question as an industry, are we really prepared for it? And I think the invariable answer would be we are probably work in progress and far away from where we should be. And maybe Sanjay can add to it. But to my mind, I think to some extent we have been blessed to get off all this, and hopefully we are at the fag end of this entire pandemic. And we have got away probably with being blessed rather than having to face the worst of what could have happened.
Absolutely, Mahesh. Just to add a figure to that, on the entire reinsurance market, they've taken a big hit. It's still an earnings event for them rather than a big, balance sheet capital, kind of inflow kind of issue. But they've learned a big lesson. So it's around 70 to 80 billion dollars of reserving they're doing just to, because they're on both sides. So, they're also on the business interruption side, which is coming. A lot of court cases, a lot of stuff. Thankfully, India has been saved on that. On the health side, while we had COVID claims, while Mahesh is saying it's now seems to be under control. There was a compensating effect on people not going and taking a lot of non-COVID treatments, which helped us to balance the part. So a lot of accidental, trauma cases went down, things like that. A lot of other infectious diseases went down, for example, and helped us to compensate a bit.
No,
But I would agree with, I think it's a huge, where we, it's come cheaply, but it's a big, big learning for all of us, including customers, including, the government, the regulator, everyone is kind of.
No, actually, Palvi, if I can come in, I think, if you were to turn it around from the customer perspective, I think a lot, India as a country, we've been saying for long, is underpenetrated when it comes to insurance, especially on the life side. If you look at protection, from what was a few years back, 92% protection gap, now maybe 83 as per the new surveys. If you were to look at the health insurance cover, the morbidity cover, it's very low. If you look at retiral and annuity, it's a large opportunity where a lot of people in our country actually have not thought through in terms of how they'll do their retirement planning, especially when lifespans are increasing. So, one is from the insurer point of view, were we ready for it? And other as a customer, initially when the pandemic hit, you found a huge amount of interest and search happening in terms of term and health, right? And then there was a sudden queue. And at the time when insurers are actually grappling with what kind of risk to take, whether we should enter in the market, like how Sanjay said, and you yourself didn't know what would be the impact of this. And, and life insurance, for instance, initially the discussion was COVID, what kind of mortality rates, but then there was a discussion about long COVID, like, because we are long-term products that we are looking at. And you don't really know that, look, what will be the impact of what is happening because of COVID and what will happen in terms of later on comorbidities coming in and impacting. So, so to that end, there was a customer sentiment which was changing. And initially, a lot of people were not sure about, and even in life insurance, there are 2-3 elements to it. One is the element in terms of pure protection, which obviously people saw term and health in the initial phases, which over a period of time, people realized, look, it's not really leading to that kind of morbidity. The other was on the savings side. Right, a lot of customers were not sure whether their savings were enough or they could commit to long-term investments in products, which you don't know whether how your business is going to do or how your job is going to be in the salaried segment. So they were not very sure about that. So there was a little bit of a hit. On the third side, there was this whole piece on credit life, where people take cover around loans that they've taken, and the whole thing slowed down as such. So even if you were to look at it from a customer perspective, there was a lot of uncertainty. And, when you wanted it, people were getting tighter. The COVID questionnaires were coming in. You wanted to be. So I think there's a lot of learning, a lot of people who were sitting on the fence, who now have to think through. So there are two things that have happened. The awareness went up. And now that we are coming out of the, pandemic in some sense, we are not sure we are fully out of it. But yes, because the economy is picking up, now the ability is also there. There's a little bit of confidence. So we probably as an insurance industry are right place where there is heightened awareness and there is a confidence on our ability to pay for a long period of time. Right. So we do believe that now mortality, morbidity, longevity, all risks, customers will seriously think through and see how they can go back and a lot of products innovation will happen in this area also.
Yeah, absolutely. So I hear you say, Suresh, that this possibly is a good trigger for us to fill that protection mortality gap, which has always, been lagging in India compared to some of our global peers. And this will, this possibly will be that trigger where we will catch up with some of our other peers. Gaurav, let me try and bring you in and, see if you have any thoughts on if you were to reflect back on, the past 12 months, and you could do a couple of things differently, what would you have done differently?
Well, it's an interesting question. So I think where we were kind of left with the largest gap, I think while we had the mechanisms to fulfill, at some level, I think we had to tune our products also. So for instance, our ability to issue whatever term business, etc., was coming in, especially the term insurance business, is predicated on medical tests, right? And especially above a certain level, this is absolutely mandatory. And you would realize that the industry had just gone through a complete overhaul on their reinsurance arrangements. So for most of the players, the new reinsurance arrangements brought along with them a heightened need to be able to assess the underlying risks better. Now, even for what business was trickling in, I think the ability to adapt to new modes of issuance, be it through, doing a medical assessment over the phone, or kind of for certain segments and pockets, being able to offer the policies through non-medical levels only. I think that adoption, those set of discussions took a fairly long time. And I think there was a period where you might have had a certain set of population who wanted to buy term. Just the initial phase, people realized that they were not covered, but your ability to issue adequate cover to them was kind of constrained by that. So I think, while the industry kind of went over that over the first 2-3 months, and people found different mechanisms, either through, absorbing some of the increased cost or passing it on to the customers. But that kind of, let some of the initial momentum or demand go. So that was definitely one. The second is, the other panelists, now that we are here today, I think a lot of the conversations with customers are around the comprehensiveness of this. So people are looking at each element and the adequacy of each element. So a lot of, while there are some products in the market which kind of try and stitch everything together, but partly because of what a life insurance company can do and what a health or a non-life insurance can do, those segregations, as well as a lack of such integrated offerings where you can have, let's say, high cover with a high amount of savings and adequate amount of coverage and against, let's say, an accidental death, critical illness, etc., all blended in. So having good, efficient products are still not something which are at least prevalent. So something which, is the need of the market today. And yes, we could have definitely started that earlier. The other learning which has kind of accelerated is the entire concept of wellness. Now we have seen the regulator also, IRD, has now allowed a lot of wellness options to be bundled along with health products. But really, I think as an industry to drive that amongst our consumers is something, we all aspire to do. And we have seen some of very interesting propositions come to market. But again, a long way for the industry to go to have a very well thought out, well nurtured wellness ecosystem for our customers. So that's something, which potentially we are sitting today, something which is need of the consumer and something which could have started a little earlier.
Yeah, that's been in the rounds for a while, but I think we've made little moves. We've spoken about it in many boardrooms, but that's something hopefully that will come in the fore after this as a clear need that consumers need. Mahesh, let me ask you, what are hence looking forward, what would be the 2 or 3 strategic priorities that, are very critical to sustain this momentum, as well as, then to build from it in terms of more innovation and driving penetration in the country? What would be those 2 or 3 strategic agenda?
Yeah, I think let me start with one big lesson learned, and I learned it in a lucky way, I would say. I think around March 15th of last year, I think when they started really talking about lockdown, many of us laughed it off saying, come on, you must be kidding. How does this work? How do you really bring an economy into a complete standstill of asking everybody to stay indoors? All this was theoretical discussion sometime in February last year because some other countries had started doing all this. So I think most of us were in the realm of not wanting to believe it or saying that, look here, this is preposterous. Yeah, this is not going to happen, right? But around March 15th, I think I remember taking one very lucky decision. I completely by providence, I would say. Something told me that, look here, if this is the worst case scenario, how do we adopt? I spoke to my IT head and he said the only way is to make sure that people are given laptops and we enable work from home, So then I asked him roughly how many laptops would you want? Would we require, how many do we have? And he came up with some number saying that I need some huge number, let's say 150, 200, 300 numbers. And I very quickly calculated the cost of hiring a laptop. And it really made me feel that, look here, I think if this doomsday happens, the cost I'm paying for hiring laptops is nothing. So I immediately told him, go place an order. Let's go and hire laptops. Let's also buy laptops, but those will take a long time to deliver. Let's block capacity for X number of laptops. Because laptops come on hiring for $1,000, $1,500 a month. That's like looking at the hindsight, I think that was probably the best decision I took. Right? And luckily, we got those laptops because we were able to corner a bit of supply. Those got delivered and configured. And I think by 28th or 29th, I think we were able to actually send those laptops out to various people pan-India, And by the time we came to April 7th or 8th, I think our work from home had completely taken place. And one big constraint called laptop was actually nailed, So I would say completely by providence. The learning, if something can happen in the realm of probability, better plan for it. Right? Black swan events are events which become theoretical, but I think there have been too many black swan events. So I think when you sit and do your strategic analysis of if and what scenario, if there is a 0.1% of something happening, at least it should have some plan to counter that as well. Brushing it aside, saying that ye to hoga nahi is bravado, and I don't think we're all paid here to be brave. We are paid here to be cautious and run this thing. So I think just on a side, I thought I should share that personal experience. So that's probably going to be on the back of my mind always to say worst case scenarios mein kya ho sakta hai and uske liye kya karna hai, no? So coming back to other things in the new era, I think the first and foremost thing that comes to my mind is software aspects. We have spoken a lot about business, about what you call digital, etc. People and mindsets in terms of how do you run companies? How do you run? Honestly, all of us are in Bombay, I think, except for Arnab maybe. What a waste of life we have led in the last 30 years. Traveling stupidly across the city for 2 meetings and 1 meeting and some Kolabe mein some meeting, Taj, for a 2-hour meeting, you huddle up in the morning, wake up, 8:39, beat the traffic, get there, come back. I feel so stupid, honestly, as to how I have led my life in this city for the last 25, 30 years, And I've made people around me as well, forcibly or maybe because of the way we were all thinking about what work is all about, right? So I think the biggest lesson learned is, look here, I think there is work-life balance can be achieved if you really, really want to do it, right? And the lockdown has taught all of us that, look here, eminently possible. I've started coming back to work 3 days a week, but to hell with it, I'm going to leave my office at 5:36. Now I'm going to leave, right? Take a call in the transit and I'll go home and do one more call, not a problem, But I'm not going to step out in peak traffic and waste 2 hours of my bloody time sitting in a car and traffic all around me blaring and wasting diesel and petrol, which is a bigger saving for the exchequer, I think these mindsets are going to really, really be the new paradigm in terms of how do we look at our employees, how do we look at work-life balance, how do we look at stress management of the workspace and outside of it. I think to my mind, these softest aspects of it, it's a great time to focus. And therefore, we are going to convert all our employees to all three options. Some will be working from office because of the nature of the job demands. Some will be working from home fully, and some will be given the option. And the ones who are working from home, we are going to probably give them hot desking, like the way you go to PVR and book my show and book your seats and come to office so that we also see you. We don't want to become a completely virtual company in terms of employee interactions. But I think these things are probably going to be the new normal. And believe you me, this will probably add a lot more flexibility, longevity. A lot more women will get attracted to the workforce, right? Because many competent women leave the organizations because of the fact that they can't manage family and work. I think the talent pool just got increased because more women will probably continue to work in the organization. I think to my mind, these are unbelievably phenomenal gains. And I would much rather focus on this because the nuts and bolts, I'm sure all of us are experts in cost management. We'll all work out rental savings. We'll all work out all the savings accrued out of various things, not sending policies by courier. All that will get worked out. But to my mind, the software aspects of what we have learned is probably the biggest thing that I would probably carry forward managing in the post-COVID era.
Very interesting, and completely agree with the waste of time, traveling on the roads. It completely makes us look like a fool. Suresh, what about you? What learnings and what 2 or 3 strategic, agenda or personal learnings you would like to take forward?
So, Palvi, I think, look, fair amount of learnings, for us, frankly, as an organization, some of these things like the digital innovation and the thrust to moving to a whole digital has been a way of life for quite some time. Like I said, the idea was not just because, you wanted to go the traditional way of not meeting people. I think there is some merit in meeting your partners, meeting your customers. There's a lot of confidence which comes in. But the fact was that, look, you could do things easier. You could get a better customer experience. You could bring cost efficiencies in place. You could look at innovation. So for me, I think, look, if we were to look at some of the learnings which came in is that, look, there is a whole lot of product innovation which is available out there when we start thinking about, opportunities and what we can do in terms of building ecosystems, in terms of building combo products, in terms of how we are able to deliver journeys to the customer. A lot of this can be thought through if we are able to, not think that, okay, this is the only way of doing business. If you start thinking through saying, okay, look, products can be, for instance, a new product that we launch in terms of Click to Protect Life, it helps you balance at various stages of your life between your protection and your critical illness. Now there are a lot of things that we can do which can cater to your customer needs. And my learning was that, look, we need to constantly innovate. It's not that we've not been doing it. We need to test our BCPs in place. Like Mahesh said, that look, a lot of things that we thought were the only way of working could have been thought differently. Employee well-being is clearly on top of the agenda. What we thought was things which could probably not have happened in terms of operational efficiencies with people working from home. I think the trust that we have played in employees and the way the employees have given it back to us, given the last 9 months, we are actually growing year on year in a pandemic year, shows the extent to which, and not just us, the financial consultant partners, the banker partners, we've learned that, look, you need to keep yourself diversified and you need to keep ensuring that there are various other ways and alternates that we need to move. On a personal front, I think, like I said, there are various things that we realize that, look, there are productivity and efficiencies which you can bring about. And for a lot of people who are now vintage in the industry, it's very easy for us to probably go back and continue business, because your partners, the products, you don't have to travel. But for a lot of people who are joining in new in the industry, right, you need to think through as to how you will build ecosystems which help them onboard onto our company, how we are able to help train them. For a lot of people who are joined in during the COVID, they don't even know people who are sitting at head office. For them, it's probably a Zoom call and just doesn't build that kind of connect which otherwise could have happened. Now, are there ways to work around this? I think a lot of us can probably invest in opportunities like this, because frankly, what we need to ensure is the value proposition which we finally deliver to the end customer. And that is what we are here for. Look, how do we go back and make sure that the customer benefits, whether it's in terms of higher IRRs on savings products, whether it's in terms of lower pricing on term, right? Do we really need the number of branches that we have got? Is there some way where we can, move this entire thing to virtual? Like Mahesh said earlier, in any case, all renewal payments, in any case, a lot of servicing is all virtual. You have bots now, you have, WhatsApp chats, you have, all of that in place, which you are anyway able to do. You have apps which can do your account management. The lucky thing is that during this COVID, there were a lot of learnings personally, which came out through other industries. Right. So, none of us thought that we could last out 6 months, 7 months by not walking out of home. And, Amazon and some of the other guys, whether it's Netflix, could kind of come in and deliver 100% of what you thought was. Yes, you probably missed the morning run when the lockdown was happening, or you missed the walks in the evening or going singing places. But beyond that, really, if you look at it, a lot of it could just get done, which met your expectations. So I think, going forward, both you thought what was relevant, maybe you need to think through to say that, look, can it be done differently, both on the personal as well as on the business side.
Very, very true. So much was done just by sitting at home. That was unfathomable a few months ago. So absolutely resonate with that. Actually, interestingly, I'm getting a few questions from the audience. So Sanjay, let me pose this one to you. There are many people in the audience who are wanting to know that there are strong tailwinds on the health insurance side, given COVID. And, we are seeing very strong momentum and growth on the health insurance. Is this to sustain? Will this continue? What is the future from a health insurance perspective?
My fundamental, answer to that is yes, because of two reasons. I would have said no if you had talked about the flood. Because, we've had situations, so we thought that after the Surat earthquake, home insurance would take off. It didn't, because of, the understanding of risk is very, different on the customer side. They think, if the earthquake has come today, it will not come for the next 50 years. It's just the same thing. If you say the pandemic has come, another 100 years, the pandemic will not come. Risk, you're thinking on our side is very different from the way customers think. But this has been a fundamental shakeup. in terms of risk, and because of what has happened in terms where everybody has gone through this. It is not about somebody in Surat having a flood or you read about the papers. Each one of us in one way or the other has been touched by this particular value. And the risk lessons and the lessons has come to each one of us, whether it's, whether you need to, how do you take care of household work itself is a big thought process, reoriented the entire thing. You didn't have, help and all of that. How do you look at health, for example? But beyond all of it, their safety becomes our concern, which is never big, people became extremely different. I keep telling this, back to Bahesh's point, I was never concerned about, somebody said, he's done coming to work. But here, if somebody is not on a meeting, I would ask you, is he okay? Is he got, is he got COVID or not? To that, the level of concern, everything, has changed very, very fundamentally, each one of us. And that will foster, not only, risk taking, but also the need for protection will go up fundamentally. And to bolster that, I will just give you a data point. Hopefully, just to, because everybody has got the same thinking. Take the 2008 crisis, and you take 4 countries, the BRICS countries. And if you just go back and look, you can study all the stats in terms of the growth of, insurance growth, the GWP growth of each of these in the insurance sector for the next, let's say, 2 years. By 2 years, growth had fallen in Brazil and Russia to 0 or negative after the 2000. But by 2010, India and China had rebounded very strong. So India and China will react differently to COVID because of the sheer lack of penetration and the numbers and very different kind of things. So my view is that this will shake us up fundamentally, and there'll be a huge, impact on the way we think through. And the impetus is just not about the individual. The corporates will start thinking. So they will start thinking different levels of covers for health insurance, for their life insurance, or whatever it is. Everything changes in that sense, is my take on this.
No, very interesting. And if this is to, sustain and become, the way, then Mahesh, will we on the health side also see a lot more innovation, both on the product side, because, today it's largely hospitalization, retail indemnity kind of product that's, that's being sold. So will we see a lot more benefits product and other kinds of OPD products which will come in play? And also on the claim side, with the entire national health stack, which the government is, is trying to significantly create as a disruption. Hence, will that also, bolster the entire health story in the country?
Yeah. So let me take the second question first in terms of the national health stack. I think data is probably data is Bhagwan for the insurance industry because we're all about data, right? So the more and more data we get along the value chain, I think the ability to call out efficiencies and pass it back as benefits to the customer is basically the business model that all of us would love to have, right? So on the claim side, unfortunately, sometimes I call the insurance industry in India, especially the way we are structured, and maybe Sanjay can probably give his views. I call myself sometime an escrow industry. I collect payment from the customer, hold it with me for some time, and somebody else keeps on taking that money over a period of time. My distributor will take away some. My garage fellow will take away some, the hospital will take away some. So we come in basically with very little control over the value chain in terms of ability to deliver quality service and quality experience to our customers, because the critical elements of the value chain, which attribute about 75-80% of my cost, is actually not within my control, right? Because I'm unable to influence some of these things because I'm not in that business, I'm in the business of providing insurance. But today, if you bang your car, the experience is all about getting the car replaced after everything has been done, right? I come in only with the financial instrument of covering you, right? I'm unable to influence the rest of the value chain. I think that's where data will help us enormously, especially on the health side, because we'll all be operated in integrated ecosystems where we'll all be able to see data flowing. Data will bring in efficiency in terms of rates, efficiency in terms of fraud management, efficiency in terms of timeliness of information being available, and ability to respond to what's happening around you, right? So I think it's a great thing, and I think government is moving in the right direction. And personally, all of us should be excited about it, and we should also be making sure we make the right investments as an industry. For instance, in the GI side, we are trying to accumulate data of claims already, either through IIB or through our own initiative at the industry, so that we are able to share the data and make sure that data at the industry level is available. Mind you, we still don't have, after 23 years, 20 years of GI industry privatization in this country, we don't have insurance bureaus. We have credit bureaus which give you a score. And I know how much credit bureau changed the dynamics of lending. Again, Suresh probably has the same background as me. From 2007-8 onwards, the default ratios have changed completely. And the power of pricing has come back to insurers because today people take the credit score very seriously. Both the industry and the individual take it very seriously. So we need to have comparable, scenarios in the insurance industry where Pallavi has an insurance score, Sanjay has an insurance score, and I give you my premium based on your credibility and your susceptibility to make a claim. I think that's the direction which we need to move. So data needs to be taken very seriously. For that, we need to make KYC mandatory, try and use the Aadhaar JAM stack as much as possible so that we're all able to benefit from the data. So that's as far as the data goes. In terms of product innovation on the health side, I think today what we are really lacking is what you guys talk about it, BCG talks about it, innovation at scale, right? A lot of innovation is already happening, Pallavi. Everybody is launching new products and new features and wearables, and the Corona Kavach is a fantastic example. 47 lakh policies got sold in just about 6 months' time. So a lot of innovations are happening, but what we lack probably is innovation at scale, because we are still looking for that silver bullet, which will really catapult the penetration from 0.9% to 1.5-2%, which has always been touted about. I think what we need is few things which can really catapult the industry or put the industry into a different orbit. Those are the innovations which are lacking. Otherwise, a lot of innovation is happening. Sandboxes around. Each of us is doing dime a dozen things across the value chain in terms of innovation. But we still maybe, hopefully as an industry, we'll get onto something which will make the customer come and buy our product, appreciate the risk. We are still a push industry. Life may be more than non-life. But yes, we are still a very, very push-driven industry. And for us, the hope is only when we convert it to a pull, where people recognize the value of insurance, recognize the value of the risk that they probably need to manage, and therefore they start buying the products rather than selling it, which is what has happened to SIP in a brilliant way with the AMFI mutual fund Sahi. I think there's been so much of pull for that particular kind of asset class rather than people trying to push it. So I think the innovation which can convert this to a pull is what probably we should all be gunning for. Otherwise, a lot of innovation is happening and they'll continue to happen. But inflection point will be 2-3 big things which will change the landscape of penetration.
No, very, very interesting thoughts, Mahesh. Suresh, I know innovation is at the core of HDFC Life, and you've always, over-indexed on tech and data as well. Since Mahesh mentioned there should be a few innovations which will really catapult the industry. If you are looking forward to one or two of those really sticking, what is the dimension or what is the area where you want this innovation to really, stick around in, and how are you working towards that?
So, Pallavi, it's not that innovation hasn't happened in the insurance industry, both on the general as well as on the life side. Year on year, there are new products coming in, whether it's a cancer care or there is a deferred annuity. There are a lot of stuff which is happening even in the life insurance industry in terms of what we have been bringing and what's there. I think the real paradigm shift will happen over a period of time. This will continue, right? The digital innovation, the product innovation. But the idea is if tomorrow, if you were to convert life insurance, like Mahesh said, from a push to a pull kind of a product, what you really need to do is create ecosystems which in some sense will turn the way the customer looks at this proposition end to end and says, look, I need to cover myself. For instance, one of the things which even Gaurav touched upon, the health system, till such time we onboard a customer. As a life insurance company, we are worried about his medical checks in terms of his health, and we want to make sure that we've got the right risk on board with us, and if anything, if either we have taken the right risk or we have rated up or whatever that's happened as an insurance industry. But frankly, the way we wanted to do is to have a long-term customer engagement where you're able to build health propositions where once the customer is on board, I think we need to realize that the insurance company and the customer have one common agenda, that look, this customer stays healthy for life. So if we are over a period of time able to build health propositions which you can take across to the customer, whether you can build support systems, and it need not be restricted. I think somewhere if there is a little bit of innovation which is allowed where insurance players can come in, can partner with other players, that is one, where we are able to take across a more holistic proposition across to customers to say that, look, we are genuinely interested. So if tomorrow you want lower renewal premiums to be paid, we would expect you to see better health which is coming in, so stay engaged with us. Similarly, if you were to go back and look at a retirement opportunity, I think there is a huge amount of innovation which can happen in terms of people who are able to look through, and we can bring support systems into place. One of the learnings in pandemic was there were friends who were sitting in the US whose parents were alone in remote, and suddenly the maids and the house help stopped coming. Now, they had absolutely no way that they could function, and they were sitting there requesting, and a lot of them were dependent on neighbors to help out their parents over a period of time. Now, if tomorrow life insurance propositions have to change, somewhere I think that, look, we need to think through as to how we build this whole value proposition around, and think through as to how we can deliver it to the customers. And I think a lot of innovation is going to happen in this front. And over a period of time, you will find that, look, customers will see value in this. So product digital, I think, look, that is hygiene now. That's almost reached a stage where we have to kind of work. The second part, which I may say, is that the whole partnership with other e-commerce and other platforms will build to a very different level, right? People have got used to doing everything over an Amazon, and people have got everything to do over a Flipkart over this pandemic, right? There is no reason why, given the level of analytics and propensity models that these people are bringing in, there is no reason why we can't partner with such large ecosystems and take our proposition across. So while we do have banks, we do have financial consultants outside, the reach to the tier 3, tier 4, the way, let's say, for instance, we work with Airtel, where we've been able to bundle a product and take it across to tier 3, tier 4. I think some of those innovations, what is probably going to change both in terms of penetration as well as in segments that we can approach.
All of those sound very, very exciting. As a customer, I can say, and as someone who works in the industry, having spoken to all of you all, seeing the amount of energy in this room, the pandemic, while has been tough on all of us, has left us with many, many learnings and many innovations that we will see going forward. On that note, we are on time, and thank you very much to all our panelists for joining us, sharing your thoughts. It's really been wonderful, sharing and having this discussion. So thank you so much.
Thank you for having us.
Thanks, Pallavi, and thanks.
Thank you.
Yeah.
Thank you, Ms. Malani. We are really grateful to all of you, because with your busy schedule, you have managed time and joined with us. And I hope you have enjoyed the entire discussion, because we have learned a lot about the innovation, about many others part, and we look forward for a resilient insurance industry. And with this, we end the session, and we look forward to have you all when we'll do it physically in Mumbai. Thank you, sir. Thank you.
Thank you.
Thank you, Anna.
We are also grateful to all our participants who have participated. More than 400 people have viewed this program till now, and I'm sure the total number of you will cross 1 lakh in few days. And we are also thankful to all the participants who had been with us via various social media platform, and to all our sponsors and all our guest speakers throughout the day. Thank you, sir.
Thank you.
Thank you.
Thank you so much.
Thank you.